you're watching Investors Guide on ET Now. Thanks for staying with us. Dhirendra is still with us in our Delhi studio. We're talking about the ICICI Prudential Dynamic Fund. Avan is here to tell us what this fund does before we ask Dhirendra if we should be investing in it. Avan. In a market where volatility seems like the word of the day every day, this fund might be the one you're looking for. The ICICI Prudential Dynamic Fund gives its fund manager the ability to take either a defensive or an attacking stand on the market based on the volatility by shifting between equity and debt and large and mid-cap investments. As a result, the fund manager can rebalance your portfolio as necessary, and that's what makes it, well, dynamic. So has this investment strategy worked? In its portfolio, it started as a large cap fund, but joined the mid-cap rally in 2003 to once again take on a large cap surge from mid-2006 onwards. Its large cap exposure currently stands at 74%. When compared to its category average, its track record is a bit spotty. It has undoubtedly had a few good years, but stood out in 2008 by limiting its fall to just 45%, and it caught the upswing of 2009 and 2010, beating its category handsomely. Let's take a look at some hard numbers. If you invested 1,000 rupees in this fund when it started, you would have 9,475 rupees today. So should you run out and buy this fund? Let's find out. The ICICI Prudential Dynamics Fund, there is a risk, of course, that's taken on when you give this much flexibility to the fund manager. Then the returns and the risk of this fund heavily depends on the calls that he makes. Do you think that this strategy has worked so far for the fund?
Yes, this strategy has worked for the fund over the past 3-4 years. 4-5 years, it has been a reasonably impressive fund, and we look at it as a large and mid-cap fund because that is how, based on its portfolio, it gets plotted. And it has done exceedingly well. It is in the, I would say that top 20% of of a relatively large mainstream equity category. But what you're saying is also right. That is, these are contingent risk. The fund manager has to be right not only about the allocation to equity and debt, but also about the kind of segment he's in. And it has worked out nicely, but it is very heavily dependent on, I don't think a model can drive those kind of opportunistic positioning of the portfolio. So I would say it has done well, and hope that it continues doing well, and be wary of, a fund manager change here.
All right, so keep an eye for fund manager changes. Another thing that investors should know about this fund is that if the fund manager decides to go into debt heavily for the course of the year, it will affect the tax treatment of this fund, won't it?
For a fund of this kind to be classified or not be eligible as an equity fund, it has to actually slip below 65% based on monthly average balance. And that has not been the state. Of course, it has a mandate, it has a provision that it can well be below that. And the other provision which comes into play is that when you pay STT, when you are getting your investments redeemed from this fund, then it qualifies for the long-term capital gains. And that has been the case so far. I don't think it in any year there has been an allocation which prompts it to be classified as a fixed income fund because the equity allocation fell below 65%. There hasn't been a situation like this in the past all these years since its launch.
All right, so it's a strong performer. Dhirendra, finally give us your rating on the ICICI Prudential Dynamic Fund. Do you expect it to continue performing in this manner?
A fund like this, and if it goes right, there's a huge reward for this strategy. Is that the kind of volatility which we see, which is beyond anybody's control, and they can't well be anticipated. And this kind of loose mandate is extremely helpful. Maybe this can backfire on occasion, but I think it has more pluses today in the kind of market we see, where some event happening in some part of the world so affects our market so severely, and no fund is insulated from that. And that is if some of those occasions this fund is able to guard itself against, it could be hugely rewarding. I would give it a 5-star, though on a risk-adjusted scale, it's a 4-star fund.
All right, 5 stars there for the ICICI Prudential Dynamics Fund. Remember, Dhirendra said that in a time like this, the market that we're looking at right now, this is probably the fund that will be able to give you the best returns and be able to dodge the risks best. All right, Balaji has written in, Dhirendra, he's 37 years old, and he tells us he wants to create a corpus of 1 crore rupees for his 2 children by investing 15,000 rupees in mutual funds every month for the next 14 to 15 years. He wants to know what funds he should be investing in. So time horizon of 15 years, he obviously wants to be aggressive. Is there one or two funds that you would recommend?
I would suggest him our aggressive portfolio. But if he just wants to focus on one or two funds, then, something like HDFC equity, UTI equity, or DSC BlackRock equity, they will fit the bill. They are the kind of, the multi-cap or the large and mid-cap fund, a fund which has reasonable flexibility to move in any part of the market.
Alright, so that's the advice going out to you. You have our entire portfolio which is custom made for someone with your goals. You can pick that portfolio. Or if you only want to invest in one or two funds, then there's a list of funds you should be investing in. Good luck. Write back to us if you need anything else. Now, all of us know that health insurance portability, which was initially slated to kick off on the 1st of July this year, had various hurdles that it met with from the insurance industry. But now, it's finally ready to roll out from the 1st of October. Now, that basically means that you will have a wider range of products to compare and choose from when you buy health insurance policies. And you won't have to worry really about your pre-existing illnesses being discontinued and starting off afresh. In fact, here's a report on how you can change your insurer if you're not happy with the service and the process you should use and the benefits that come with health insurance portability. Take a look.
The best part about being an Indian consumer today are endless choices, irrespective of what you're shopping for. And come the 1st of October, those endless choices will be available to you as a health insurance customer as well. Say hello to health insurance portability.
The new health portability guidelines are fairly advantageous to customers in the sense that they allow the customer for the first time to have a choice, where if the customer, for example, is unhappy with the services that a particular insurer provides them, or if the circumstances of the customer changes where he is unable to continue with an existing policy, whether it is a group policy or an individual policy, the customer now has a choice where he can switch his existing plan from one insurer to another insurer's plan.
Up until now, every time you changed your health insurance policy, especially by changing jobs, your pre-existing illness was not covered under your new policy until you completed the waiting period all over again.
First one, of course, is that he is able to port his, waiting period. That's the big one. Because, that meant that he was forever locked out of buying a new policy because his waiting period was not portable. So, the second one is, of course, the whole issue of, having earned a no-claim bonus on his policy, which basically raised his sum insured coverage level on a policy up to a maximum of 50%.
The best part about health insurance portability is that it's free. All you have to do is fill out a form at least 45 days before the renewal date of your existing policy.
This is to make sure that the insurer has sufficient time to be able to issue a new contract, so there is no kind of period where the insured person is not covered. There are guidelines in place, obviously, to protect in the event that that timeline is shortened as well. And beyond that is that once the insurer has received all the information, he is obliged to give a decision whether to accept or reject the application within 15 days. If the insurer does not give a decision within 15 days, it is mandatorily accepted that he will accept the application.
With portability, you can now switch to a health insurance provider that offers you better rates, covers for pregnancy or senior citizens, and gives you better customer service. So how should you pick a new policy? Here are some tips. Check if your insurer covers pre-existing illnesses. Ensure your waiting period is not more than your existing policy. Check the extra premium you may have to pay for a higher sum assured. And finally, ask your preferred hospital if it is a part of the cashless network of the new insurer and if its service is prompt and customer friendly. A list of all the health insurance providers and the regulations on portability are easily available on the website of the insurance regulator at irda.gov.in.
Alright, remember you can write back to us if you have any doubts about what you heard on that story or if you need help with your health insurance. Dhirendra, thank you so much for joining us on Investors Guide and answering our questions. We look forward to sitting down with you again next week. Remember, questions for Dhirendra, write to us at the email ID at the bottom of your screen. Coming up on the other side, Vishal Kapoor joins us. He's going to answer some questions on your portfolio. Don't go anywhere.